Federal Reserve Chair Jerome Powell, of course, is testifying in front of the Senate for his semi-annual monetary policy address. Powell facing questions about banking regulations, housing, and of course, inflation. Here's what he had to say about the central bank's thinking around rate cuts.
We do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%.
Here to help me microscopically comb through some of his commentary, we've got Yahoo Finance's Morning Brief and Catalyst's co-anchor, Shauna Smith. Hey, Shauna.
Hey, Brad. So we just heard Powell talking about inflation. There's some progress that has been made, remaining optimistic about that progress that we really have seen over the last couple of prints. But what stuck out to me in those comments here today, and really what maybe differentiates it from the tone that he has struck in the prior meetings, was he did talk a little bit about the fact that inflation is not the only risk that they face right now. There's also some weakness maybe starting to form within the housing market. He did allay some of those fears, though, saying that, yes, the housing market remains strong, but when you see the numbers, when you see the fact that the employment rate ticking up here over the last couple of months, does point to the fact that the jobs market has been slowing. So that's really one thing that did stick out to me within his commentary here today. And also just in terms of what this means to you guys at home, he talked about the risk of waiting too long and maybe further weakening the economy. So that really sets up just how difficult this job is for the Fed right now, given the dynamics at play. And I also know a lot of you at home are closely watching what's happening within the housing market. And this is something that's really caught many forecasters, many economists off guard with some of the some of the patterns that we've seen play out within the housing market over the last several months, several quarters. And Montana Senator Jon Tester, he actually asked Fed Chair Jay Powell about some of those housing issues, including low supply and high mortgage rates, and how housing challenges really fit into the Fed's calculus surrounding the economy. Here's what he had to say.
For housing supply, the best thing we can do is get inflation under control so that rates can come back down, so that we can have a more normalized set of rates and a more normalized housing system. But I think policies to increase housing supply are really not so much in the hands of the Fed, they're in the hands of legislatures. I'm aware that housing is in short supply, and that for many it's a critical need for the workforce. Okay. And so more of it is better, but as to where the fiscal policy how you should prioritize that's not up to us.
So as interest rates have remained high for longer, we've seen this ongoing crunch within the housing market. A lot of that being attributed to the fact that mortgage rates still hovering right around 7%. Yes, off of those highs, but not enough to prompt those existing homeowners right now to put their homes on the market. Why? Because if they do move and buy a new home, they're going to be paying higher rates here. Now, it's not likely we will ever return or anytime soon return to those very, very low levels that we saw at the start of the pandemic. But if we do see some improvement when it comes to rates, if we do see a drop within mortgage rates, then the theory there is that is going to unlock some of the supply issues that we have seen play out in the market, and then ultimately potentially make homes more affordable than they are today, and might help, alleviate some of the pressure that we have seen on pricing.
Yeah, and exactly. They said that inflation has eased. It's eased notably over the past couple of years, but remains above the committee's longer run goal of 2%. Total PCE right now, prices still at about 2.6% over the 12 months ending in May. That's the most recent that they were evaluating, and that made its way into the commentary here, broken down by our own Shauna Smith. Shauna, thanks so much.
Thanks for having me.
Definitely.